Every year, 40,000 people flock to Omaha, Nebraska to hear Warren Buffett and Charlie Munger speak. They discuss nearly everything, from what they perceive happening in the stock market and the economy to inflation and even Bitcoin. These questions and answers have become famous, and they are an excellent way to learn about investing, whether you're just getting started or you're managing a multi-billion-dollar portfolio. In this video, we'll go through key points raised by Charlie and Warren at their recent discussion. Please do like the video and subscribe to our channel if you want to see more videos like this. Let's get to the video now. The first topic they discuss is Robinhood. They said, "Look what happened to Robinhood from its top to its bottom. Wasn't it rather obvious that something like that would occur? It was awful when Robinhood came out, became public, and informed everyone and all the short-term gambling, large commissions, and covert kickbacks. They've made a lot of money out of it. They were popular, but there was some justice served." They then discussed Bitcoin. Here's what they said. "There are all kinds of folks who are long Bitcoin. If everyone in this room owned all of the farmland in the United States and you offered me a 1% stake in it, as Warren Buffett said, from a 1% stake in all of the farmland in the United States, I'll write you a check for $25 billion this afternoon. I now own 1/10 of the farmland. I'll send you a check if you tell me you own 1% of the apartment houses in the United States as well. And you offer me a 1% interest, so I'll have 1% of all of the apartment houses in the country." He continued, "If you told me you possessed all of the Bitcoin in the world and offered it to me for $25, I wouldn't take it because I wouldn't know what to do with it. I have no choice except to sell it back to you. It won't accomplish anything. The flats will provide rental income while the farms will generate food. Why not call it the Buffett coin? That clarifies the distinction between productive assets and assets that rely on the next guy paying you more than the last guy. Certain things are valuable because they generate something physical. In order for assets to be valuable, they must provide something to someone. There's only one acceptable currency," they said. Finally, anyone who believes the United States will reform and allow another currency is delusional. At number 3, they discussed investing in China. They stated that the Chinese government has concerned US investors that invest in China, more recently than in previous months and years. As a result, there has been some friction which has damaged the prices of some Chinese companies, notably internet stocks. Just in the last few days, the Chinese leader has changed direction and stated that he went too far. He's going to take a step back. We're seeing some encouraging signals, they said. But investing and dealing with the government in China is more challenging than it is in the United States. Munger said that he invested in China because he could obtain better companies at lower prices, and he was willing to accept a little political risk in order to get the better companies. They were asked about market timing at number 4. They stated, "We have no notion what the stock market will do when it starts on Monday. We've never had one. We've never made a choice based on what the market would do. We were optimistic in 2008, but we squandered a large portion of our financial worth during a particularly bad period. In the previous 2 weeks, we spent roughly $15 or $16 billion between Wrigley and Goldman Sachs. We have had a bad sense of timing. We've gotten really proficient at determining whether we're receiving good value for our money. Never ever give us credit. We've never timed anything. We've never figured out economic insights." Warren said that he acquired stock when he was approximately 11 years old on March 12, 1942, when the Dow was at 90. It was 1:01 in the morning, and at the end of the day, it was 99. Now, it's 34,000. Before we continue on, do click that like button and subscribe to our channel for more content like this. Now let's get back to the video. They mentioned Wall Street at number 5. According to them, our market has always been a casino. The market can be fairly investment-oriented at times, but it's also like a casino at other times. Wall Street generates money by catching the crumbs that fall from a table of capitalism and an extraordinary economy that no one could have imagined a couple hundred years ago. They don't make money unless people do things and they get a cut of the action. And they make a lot more money when people gamble than when they invest. It's far preferable to have someone who will trade 20 times a day and get all pumped up about paying the slot machine. Inflation was the next key problem they discussed at number 6. They said that inflation also defrauds bond investors. It defrauds someone who keeps their money under their mattress. It defrauds practically everyone. The issue is that most companies require some form of funding. Here's what Warren Buffett said. I published an article about it, and I'll tell you a famous anecdote about which you'll all sympathize. I wrote a piece for Fortune, and it was roughly 7,000 words long when I finished it. Fortune didn't like printing 7,000 words, and they had my friend Carol Willis explain it to me, knowing I'd listened to her more than anybody else. Being adamant, I stated that every syllable is valuable. They could either run it or not, so they dispatched an editor to Omaha. This individual explained to me that it wasn't appropriate to use so many words, and I agreed. If you don't do it though, I'll write it somewhere else. I then sent it. It was starting to annoy me, so I texted my friend Meg Greenfield. Meg was a fantastic editor at the Washington Post, and we were wonderful friends. Warren, you don't have to share everything you know in this article, Meg Greenfield remarked. Because she made a point, Warren then created a shorter article. Basically, it would be better for businesses and investors in general if you could have a completely stable unit of monetary use over the next 100 years. At number 7, let's take a look at what they had to say about Jerome Powell and the Federal Reserve. They claimed that it occurred on a scale they never witnessed before. Those checks that were just mailed to everyone who claimed to have a business and employees undoubtedly drenched the country of money for a while. It had never been done on such a large scale before. Jay Powell is a hero in my opinion, as Warren Buffett said. I mean, it's quite basic. He completed his task. It would have been quite easy for him to participate in thumb sucking if he had done nothing. Other Fed chairs would have been licking their thumbs and the world would have ended. Finally, the two discussed Berkshire's cash balance. They stated we'd always have a lot of cash on hand. And by cash, they did not mean commercial paper. They didn't possess anyone's commercial paper when the financial crisis of 2008 and 2009 hit. They said, we lacked market funds. We did not have any treasury bills. We believe in having cash on hand. If you don't have it, you won't be able to play the next day. It's similar to oxygen. It's always there, but if it goes away for a few minutes, it's all over. So when our cash was down on March 31st, because we spent that enormous quantity in such a short period during the quarter, around 40 billion, we committed to buying Allegheny for more than 11 billion. We will always have plenty of money. Some of our businesses have bank lines. I'm not sure why they have bank lines, they said. We're better than banks and will lend them money if they need it. However, local bankers have been calling and they require assistance. Everyone else has bank accounts. Although it appears innocuous, there's no reason for any of our subsidiaries to have bank lines when Berkshire is stronger than the banks. Money is a fascinating topic that people seem to enjoy discussing. In this country, we've done a variety of things with money, they said. In closing, they choose to delegate money creation to the Federal Reserve. Money is the only thing the IRS will take from you. This is how debts are settled in the United States. This is the only kind of money you'll ever see in your life. And that just about wraps the video. What did you think about what Charlie Munger and Warren Buffett had to say? Let us know in the comment section down below. As always, do give us a like and subscribe to our channel for more content like this. See you in the next video.